Good morning. It is almost 9:30 UTC on the 10th of October. So lots of stuff to get through, especially with Bitcoin, since we've had a little bit more of a breakdown, which is nice to see. Localized failures and some continuations. We're getting to a pretty interesting point, basically the local, I would say, inflection point. Looking at the economic calendar from today. So big thing stepping in earlier before the New York Stock Exchange is open. So about an hour before, you're going to be seeing some increases in volatility is my expectation. You've got the CPI data, core CPI, and initial jobless all coming 1 hour before the New York opens. So expect a volatile pre-market open to open. That's to be expected. PPI also doing the same thing for us on Friday. A little glance into next week real quick. Nothing, literally nothing important until Thursday. So we'll keep an eye on that. Looking at Bitcoin long short ratios, longs are still building as the price action has been grinding down. Just in the last couple of hours, are we seeing a little bit of reversal, but it's not a whole lot yet. We're getting closer to that, 2-to-1 long short ratio, 65% long now. So overall, not good in the kind of long run for a reversal. In the last few hours, we're seeing people attempting to short, expecting a potential breakdown, but that's only because of the local little bounce we found after the move yesterday. So we want to see this come dramatically down, and obviously, if we do have gaining some upside price action, we want retail traders to try and short it. That's the best way to get us back to key levels like above 64, which could reverse this entire thing. But like I said, we're at an inflection point. Funding rates, major difference from yesterday and earlier this week as they're coming back towards neutral. So overall, BitMEX even but a big old minus 0.011%. That's awesome. We want to see that across the board. It's not like a clean sweep yet. There's still quite a bit of positive funding rates coming in, but the more closer to zero and more negative they are, the more they influence potential upside. So this is good. It's a good step potentially, but again, it's not a sign of reversal yet. Looking at the liquidations in the local area, so we've had that big move down that swept us right into the next leg at 60.6, a key level. This is really where we want to see holds. I would expect any losses of these 60K lows. We do this big sweep down to 58K before we get a bit of a bounce because there's a gap there. But overall, like I said, we've had a little bit of a bounce in the early morning hours, which is why we saw the long short ratio coming down a bit. People trying to short into that upside move. We'll see if we get that reversal. Right now, it looks like it wants to, break through this massive amount of short liquidity. And like I said, to the upside, it's not all doom and gloom. All we really have to do is gain above 64K. And now we're putting in all of the short liquidity that we put in the last week, as well as the stuff from the week before, kind of lined up to where we can actually potentially have a new high. That goes out the window the moment we break this low. So we're really at a key inflection point. The shorts that were earlier in this week were pretty much easy as we broke down, bearish to retest and failed to go lower. So we do have priority down until we see some major regains of level. Looking over at the trading light charts, just to look at some resting orders. We have some stuff stepping in here, a couple hundred Bitcoin, which is good. If these things start to get pushed into hard, I would expect this to create more fuel for downside movements. We're also seeing stuff getting pulled, and the heavier long liquidity isn't down here until we get towards 58K. Sorry, not liquidity. Resting limit orders aren't until we start getting to like 58.5, and then the real thick of it's down here around 58K. So this is good. There's a potential for holds. I don't like the fact that it's pretty weak looking here at the lows that are really critical to hold. That being said, there's very little limit orders above us to hold price, and any regain, like I said, of effectively 64K would probably make us make some new local highs. So it's not all doom and gloom. Open interest did build up quite nicely, especially with the downside move. If we look at the liquidations, pretty mild across the board, so that's generally good. What that kind of intuitively says to me, and what we can see on the liquidations, is that sub 60K is where all those big liquidation levels are. And if we do have that move, we're going to see a lot of long licks. Looking at the footprint to see the market orders, basically the order flow. There's some good imbalances above us if we get some little retests, but nothing really juicy on any meaningful time frame until, like I said, we get above 64K and start targeting 65 and potentially higher, getting into that liquidity. To the downside, it's pretty thin. The thing that we have to look at now is where's the priority of aggressiveness. The downside we had from earlier or late last night and early this morning, very, very much strong downside push. All of the long liquidity from the last few days has been fully taken. There's not really anything left to mention. if there's going to be a localized bounce, you want to see some local regains of level. We're seeing good rejections off to 61K. If you go a little bit lower, we've not really gained anything back, but 61.1 even, you might be able to put some of these shorts out of position. I'm not interested in it until we actually see some type of regain, especially on higher time frame, because we do have priority down. So going with the general plan here, just some metrics, still looking pretty downside bearish, not really reversal. Looking over at the plan specifically for TradingView is what I'm looking at now. There's a local regain getting above 61.1, 61.2, that kind of old March level. That would start regaining a significant order block that could take us back up towards important levels. 62.5, 62.8, 63.3. These are all major resistance points and high time frame opens. But because we've broken down and we've actually effectively retested all of these levels bearishly, these will act as resistance as initial touch points. So a lot of work needs to be done to regain the significant stuff. 64K is the goal. That is the gain that gets you back up to break into new local highs, or at least test the high resistance of what we did at the end of September. Until then, you're at the lows. You have demand here. There's still support. If you fail this, fail the May, fail the daily open, you are going to have that kind of sweep to probably 59.5, and then kind of grinding, pushing down into that liquidity, which is what we saw in the last couple of days. So keep an eye on that. They get downside priority. However, it's not all doom and gloom in the local price action. We could easily start regaining some priority. However, we need to actually regain levels. Until then, you're at support. If you're in the shorts from earlier, this is a great profit taking area. Any bounces that are failed are retests to go lower. And those are, again, short continuations, especially confirmed once we get a loss of 60K. The 60.6K is holding for now, but the moment we lose 60K, any chance of regaining priority is pretty much out the window until we go sub 60K or down to 58K. So that's that. Take it easy and catch you tomorrow.